Today, episode 1. I'm excited to be announcing my podcast live show, Unfiltered. My guest, my concrete or solid guest, or however you call that, is Stephen Fennell.
Hello, how we doing?
We're going to be talking to Stephen today about issues and how to overcome issues with applying for a house. But let's go into a little bit about what this show, the value, the purpose of this show. The name of it is Jeff of All Trades. I like how that sounds, like Jack of all trades. And I feel like Stephen is Stephen of all trades in what he does, and that's why he's on the show. And we're going to talk about, today's about lending, but the concept is to talk about companies in the community, in the surrounding areas that are doing things for their customers, how they do it, what is successful, ways they handle the issues, and why they're number one. To give you an idea, we're going to, in a couple shows, we'll be talking to a barbershop that's in a CrossFit gym. And then I'm trying to get the guy, the president of the tennis club in Lake Nona that has like 100 tennis courts, that new facility on. So it's not just real estate. It's going to be a big range of things. But real estate is a big part of it. That's why Stephen's on for today. So I want to thank you for listening. Hit that like button. It's going to be on YouTube as well. A video will be put on YouTube. We haven't gotten the podcast completely up, but that will be up, and you can download the episode for the podcast so you can hear me and Stephen and all my other guests on there. But to get in today's show, we're going to be talking about the highs and lows, the nightmares of applying for a home loan, and that's why we have Mr. Fennell on here. Mr. Fennell, a lot of people that know me, clients, hear me talk about you and hear me talk to them on what you can do. But tell me a little bit about you and how long you've been doing this and just your highlights and where you're at and all that stuff.
Sure. Well, thank you. Thank you for the opportunity to be a part of the Jeff of All Trades show. I certainly categorize myself as being a master of at least one thing. So, but I've been in the business as a mortgage banker for almost 4 years. It'll be 4 years in a little over a month now. And I have worked for some correspondent lenders, some big banks, and some smaller banks. And so I've had an opportunity to understand the different processes and guidelines and efficiencies and challenges, working with people from really, really bad credit to those with stellar, superb 800 plus credit. So there's certainly a variation in the way you need to delicately deal with each of those individuals. And so I'm very blessed to have had the opportunity to work with some really good companies in all of those spaces and ranges. And so, I think that it is important to give everyone an opportunity and a shot at financial independence. And so that's why I really enjoy this space and being a part of this industry. And it's nothing better than the joy of seeing people, achieve home ownership and financial independence and the emotion and the great feelings that come along with that too.
Perfect. I like how you said give everybody an opportunity. The people that have 800 plus, 700 plus credit scores, and that's what we're gonna talk about, the details that not a lot of people talk about. I meet so many buyers. I do 2 to 3 open houses a week, and I just from that and other ways of talking to people, they have no idea. And there's not like a guidebook. There's not a 101 class. They have a home buyers class, but that's for down payment assistance and grants, and we'll talk about that a little bit. But it doesn't really talk to them about the most important thing, and that's figuring out how much you want to pay a month and how to get that monthly payment down. And to get to that, no one talks about the struggle. What's the name of the company that you're with?
I'm with Fountain Mortgage.
Mortgage, perfect.
Yes.
And that's funny, you said 4 years. I think I might be coming up on my 4-year anniversary with my real estate license. I don't know if it's there yet, but it's getting close.
Wow. What a coincidence.
Yeah, same thing. Look at that. We didn't know we were starting at the same time.
Yeah,
But we're still kicking butt and taking names.
that's right.
So let's see here. What I want to talk about first is it all comes down to finding out if you can get the money. If the lender, Mr. Fennell, which of course it's not him, it's the Fountain Mortgage, but if Fennell can give you that money. And to find that out, there's two different things. It's called a pre-approval letter and a pre-qualification letter. And
Right.
98% of people have no idea what that is. 94% of realtors don't have any idea what that is. And talking about the show a little bit, this is for everybody, not just consumers, but realtors as well. You know, I learned from listening and reading and being around people that are doing well, and that this show's for everybody. It's just not, one particular thing. It's for agents as well. Anything I could do to help other agents that I'm doing, or that I can help them with a project that they're on. I mean, the show is to help everybody, not just one particular field, but everybody. So going with the paperwork, with the pre-approval letter, the bank actually looks at your paperwork. They actually read it. They pull your credit. A pre-qualification letter is just words, just like I'm talking to you right now. If I was to tell Mr. Fennell, Stephen, that I have 1,000, or I don't even know if there's 1,000, but a 900 credit score, 300 grand in the bank, and I make 300 grand a year, he's going to qualify me for something that fits that. But when he looks at my paperwork and realizes that I blew smoke the whole time, he can't, he's like, whoa. So everybody comes and like, oh, I got a pre-qualification letter, and they don't get the paperwork in. And I feel that paperwork is just, people have such a hard time. They have a hard time either because they're they're not technology savvy. They don't understand the paperwork. So that's what we're going to dive in a little bit. So you don't want a pre-qualification letter. That's what like online lending companies are like, answer these questions, we can give you a pre-qualification letter. As my sellers, when we get an offer, if I see a pre-qual, which I have it on the realtor remarks, which only realtors see, and some don't know what it is, but I have only pre-approved letters, not pre-qualification letters, because they're not real. It's not a real thing. So to get that pre-approval letter, the paperwork, going back to this paperwork, you need bank statements. How do you get those bank statements? Okay, I'm going to go and just print them off my computer. You go and you try to do that, and you realize you can't do that. There are certain banks, you might be able to print okay, we want the most recent bank statements. We want the 30 days and then the most recent one. The 30 days you might be able to download, but the thing that people run into with that is, how do you download a bank statement? I'm going to point out one thing. I'm going to let Stephen point out one thing, just like, your taxes, your W-2s. Go back to that bank statement, okay? When I have Wells Fargo, when I log on to Wells Fargo and I'm like, okay, he told me to get my bank statement. All right, this month is fine. I can click download, and then a lot of people don't know how to download. Download computer, save it, put a name on it, email it as a PDF. A lot of people don't know how to do that. But going one step further, when you try to do the transaction, when you try to do from today, the 15th, your monthly statement isn't until like another 10 days. When you go to click that transaction history, it doesn't show the bank's email at the bottom, their signature. It's going to have information in the last four. So how many times do you get the wrong bank statement sent?
Well, I think it's too many to mention how many times, unfortunately.
But they just don't know, because if I was doing it, I would think that was fine. You have to go to print. You have to click turn into PDF, and somehow that adds the link to it.
It does.
No one's telling you this stuff.
Yeah. It adds the identifying address of the bank, and that's what the underwriter's looking for. And it's a footer and a header, and those are small dialog box options when you go to print it as a PDF, that you got to click that box. And so many times what we get is PDF transactions, but it doesn't have that URL. And if it's a transaction statement, it doesn't have the URL, we can't use it, creating a very frustrating experience for the buyer, right? That's part of the challenge of the frustration that people talk about with, oh God, they just kept coming back and asking me for the same thing over and over again. And what I gave them should be sufficient. And so there's some idiosyncrasies and some specific things that have to be done in order to, make sure that it meets the governmental or the private investor guidelines, right? And the bank statements are the biggest challenge that we face as loan officers in this business.
You said a couple words I want to highlight on. One's the underwriter. It sounds like the Undertaker from WWE. That only comes out like twice or three times a year. Like, he has a huge payday, a massive payday. He only works like twice a year. Okay, and then you said the government guidelines, or the state, or say that again, the federal guidelines.
The federal underwriting guidelines, yes.
There's that word again. Okay, so let's work on that. And then you also said, wait a minute, I sent you this. I've already sent you this. So we're going to talk about this underwriter. The underwriter is the department that actually approves the loan. And people get mad because they send these documents, the bank statement, the W-2, the taxes, the school, if you have a school payment, if you've been in a divorce, if you, whatever, like either of these extra things that apply for that situation, you get all that together, you go under contract. We're getting kind of ahead of ourselves, but you go under contract, and then that gets sent to the underwriter, and then the underwriter's like, okay, this is wrong, this sucks, this is not going to work. But the client, there's that stress. They're gonna get an email from Stephen, and this is where, as a good agent, I recommend all agents doing this. You have to work hand in hand with your lender. You have to do a group text message with your lender, with the customers, and walk step by step with that curve of either technology, common sense, no disrespect to anybody, but technology or common sense on, I assume I understood it, but do they understood it? That underwriter's going to kick it back, and then that's that first no that the client gets, and they're like, whoa, why did I sent them that? Why? And then it's your personal information. So there's like another level of like fear, of like, wait a minute, should I even be doing this? Should I sign this closing disclosure? That is not right at all. The mortgage, well, I think the mortgage payment's pretty much dead on, but the closing cost is never right.
Right.
Well, we'll touch on that real quick. There's a document that the buyer signs that's like 50 pages long that looks really scary, and it's called the closing disclosure at the beginning. Or what is it called at the beginning?
The beginning is the disclosures, and it's the loan estimate at the beginning, which is about 3. The closing disclosure comes towards the end, and it's about 7 pages. And it's, most of the time it's a preliminary view as to where things are point in time today. And they're never really truly finalized until the loan is cleared to close and the title company balances after the loan's cleared to close. So everyone is always apprehensive to sign it. They're very fearful. They're like, I don't want to commit myself to this. And I've had people say, so what you're telling me is that these numbers are not accurate. And I have to say, well, they're accurate to the best of our ability right now, but they're not final. So
back to that loan disclosure. How many pieces of paper did that say?
The loan estimate is about 3 pages. The loan disclosures could be 50 to 70 pages. That they may have to sign. Some of that is just packets of paper and stuff like that.
What they need to write on that is the loan, all those numbers. The mortgage payment's normally dead on, but all the closing costs, that's not a commitment. But when you read the paperwork, when you read it, it looks like they're going to take your firstborn, they're going to take your vehicles, they're going to take your vacation money, and they're going to fire you from your job, because the way that it's written in a lawyer lingo that it's very scary, and it's normally more than 3 pages. I think the one that I've seen with a couple of our clients is like 10 pages or something. And you're right. So right there, boom, we hit another wall. If the agent isn't going over that, if the lender isn't prepping them for that paperwork, then anybody just tuning in, the show's about Jeff of all trades, Stephen Fennell, lender, master of one, or master of none, or how do you say it right?
Master of one, finances, yeah.
Got it. We're talking about the details of applying, of getting that pre-qualification letter. No, I mean pre-approval letter. That was a trick question there. Getting that letter, and the hiccups that a lot of people run into. A lot of people run into when they try to turn in that paperwork and it's wrong. It's not the right stuff.
Mm-hmm.
What we've learned so far is it's not easy to download a bank statement. You have to do it a certain way.
Right.
Writer is, you can't think of him as a person. You got to think of him as the person on WWE, wrestler, Undertaker, that doesn't talk. He doesn't talk. The underwriter doesn't talk. Do you talk to the underwriter?
I have the ability to talk to the underwriter. Typically, they'll come back if they have some questions or need some specific situations about that person, or if I need to relay some stuff, sometimes I can. But most of the times, they're just going through the paperwork and reviewing it themselves. And if we need to talk, we can talk. Not every loan officer has the ability to do that, though. All right. Most times, most loan officers don't have an underwriter there when they can pick the telephone up and call, or one in the building. Most of them don't have that capability.
And then, but the client can't talk. The client can't talk to the underwriter.
Right. That's correct. That's correct.
I don't understand either. That person, it's frustrating because that's the person that's telling them. Well, they don't realize it, but that's the person that's telling them that what they just sent in is incorrect.
Right. That's right. That's right. Absolutely. Absolutely. That's the challenge associated with it.
And then, all right. Well, I think we touched on that pretty good. So, what are some successful ways that you handle those obstacles? What are some successful ways that you guide people through?
Yeah, I mean, one of the things that I try to provide, particularly with the bank statement situations, is just an example of what we're looking for. And, we can provide them with a sample up front. Sometimes it makes it a lot easier. They understand. I think typically, like any of us, if we know better, we will do better. The frustration comes in because we don't know, we weren't told. And so when they go through the time and the effort to get those bank statements and they're wrong, it creates tension, frustration, and stress. And then you add all that up with the fact that you're moving and you're buying a house, and those are two of the three most stressful things you could do. That's where you have the combustion, right? So what I try to do is provide some examples of, hey, here's what it looks like. This is what I need. This is what we're looking for, so that before they embark on that journey, they know what to expect and they know what to prepare themselves for. So, and I get that. I was just doing a online situation yesterday myself, and the snapshot of the tutorial that I needed in the help guide, it didn't match what was online. So I got frustrated, right? So I get it. We're all human, because their example didn't match the system that I was accessing. So I thought, this isn't working. You're giving me something to use as a guide, and it doesn't match what I'm seeing. So I get the frustration if you don't communicate what you need and set the expectations and provide visual examples, because a lot of us are visuals.
Yeah.
We're not just auditories, we're visuals. So the visual is very helpful for people to be able to match up and say, okay, this is what you want, to make the experience a little bit easier.
Great answer. Great answer. I think one thing that you do well, and other people that don't know, Stephen is my main lender. He's the gentleman that's taught me a lot, and not just taught me. He's been able to outbeat any other lender for the last year or year and a half. I'm not sure, maybe year. Our first client was David.
Mm-hmm. Mm-hmm.
Real quick, because we don't have.
Yeah.
Dave,
Yeah.
I met David, and he had a wife, and he had, I think, 2 kids. He had a couple kids. Actually, I think he had 3 kids. I just don't remember. It was like a year ago. I should. But I remember the situation. I had another leading lender. Not going to say who it was, but I had another premier lender. I was calling premier lender, just like you are. And David's like, look, hey, I met this guy named Steven, and he can get me this rate, and his fee is only this. And I was like, what? I've never heard of that. Get out of here. At the front door. And it came down to, he said, Jeff, I want to work with you. I'm like, you can work with any lender. My job is to get you the best value. My job is to get you the lowest payment. and the best value, the more money in your pocket, less money out of your pocket. And it came down to, if he would have went with my other lender, he would have paid $90 more a month. And he's like, look, no matter how much I care about a person or know how good a friend I am with a person, it's not worth me paying $90 12 times a year times 30. It's stupid. It doesn't matter. Right. And that is what a lot of realtors don't look out for. They don't reach out and find that good deal. And I say that because I run to a lot of realtors that just don't search, and they're not always on the know. Can I tell them your standard fee?
Sure.
So this is one thing that I don't see a lot of people doing. 3% is the traditional closing cost. We're not going to go in what that is because that's going to take too long. But Stephen's fee is only $950. His interest rate is normally extremely low. Real quick example, client, 580 credit score, 4.6, 4.59, 4.6, 4.59. And since his fee was only $950, we were able to take, when we asked for 3% back, I'm not going to get into that, but that's normally what it is. There was extra money in there to buy down that interest rate so it fit into a good payment. You know, she was able to get that 4.59. And I can't find anybody to do that. Another example, somebody that is high credit score, like you're saying, they're in the 3s, 3.5, 3.6.
Low threes, yeah.
No one's really doing that. So very, very happy to have a partner that I can provide that value. We're going to talk about 2 more things real quick before we run out of time. I'm going to go a little fast just so they get it in. We're talking about paperwork. We're going to switch from paperwork to, there's a 20% myth that you can buy a home, that you need to buy a home. You don't need 20% down to buy a home. You can buy a home with 3.5% down. People that think that they need all this money, you don't need tens of thousands of dollars to buy a home. And I'll let you dive into that. So what's can I buy a home for $1? If I have 99 cents, I can buy a car for $1.
You could, yeah. So the myth is that everyone thinks they have to come up with 20% down to buy a house, and you don't have to come up with 20% down. That's often confused with trying to get the PMI bought out, and that's why I think a lot of people are now thinking I have to have 20%. So PMI is the private mortgage insurance. It's the insurance that unless you put 20% down or another alternative method, which I'll talk about in a second, you have to pay as a part of your monthly payment. That goes to cover the bank in case you default on your loan. So it's called PMI, or private mortgage insurance.
Yeah,
absolutely. It's an insurance company. We're going to, insurance companies.
Just on how to get rid of that PMI and how to get a loan without PMI. We can't do it today, but me and Stephen really is the master of telling the government that they're not getting your money. No money, no government money at all.
Yep, the private mortgage insurance company, absolutely. But yeah, so, you don't have to. You can get a house with, 3% down, 1.5% down, 3.5% down, 5% down. No longer have to put down 20% in order to qualify for a home. So that's a myth we want to dispel, because a lot of people are waiting. And while they're waiting, sometimes they're messing up their credit trying to save up 20%, and you don't necessarily need to do that. So, you can get it. There's a lot of loan options and programs out there to get together 1.5%, 3.5%, or 5% down.
So to give you an example, we're going to talk about like first-time home buyer programs and the myth that is, because people think that there's actually some special thing that the government's going to do for them and it's going to save their day, and everybody wants to take advantage of it. That's what we're going to talk about next. But just to highlight on that thing, you could buy a home with 3%, 3.5%. 3% of 300,000 is 9,000. 3.5% of 300,000 is 10.5. 10.5. So let's lower that. So 3.5%. You need, let's say you have 250,000, and we're going to do a show about, you don't look at the home price, you look at the mortgage amount. You don't say, okay, I can't spend no more than $300,000, because a $300,000 home and a $340,000 home, Stephen knows this better than anybody, they could have the same payment. They can have, okay? So you don't base it off of that. And I meet so many buyers that are like, my lender says I can't go no more than 240, 280. I'm like, okay, let's Steven, why? Oh, because, you know, that's what they're approving me up to. Steven, on the other hand, you don't think that way. It's about how much money you want to pay a month. And 98% of the people I talk to don't have that mentality. They don't even know how much they're going to spend a month. They don't know. The lender that they've been talking to, or that they've been talking that's been helping them, hasn't even gotten to that. Hey, what are you comfortable with? 600? I mean, 1,600, 1,800, 2,000. They're just saying, hey, you can spend up to 300,000, but they're not. When they get that mortgage, when they actually get a payment example, whether from the agent, because Stephen has trained me like a ninja on that payment later, good payment, like for real, like within like $100.
Yeah.
That's a big deal when we're looking at a house. If I give you a payment for $1,800, but it's really $2,100 when Stephen gets into it, you're going to be mad at Jeff. It's not going to be Jeff of all trades.
All right.
But that, you know, and I want to dive into that, not now, but get to 250,000 times 3.5%, 8,700. You know, someone has 7,000, 8,000, and you can get a house. You do not need to pay your closing costs. That's just something I wanted to mention along with the paperwork. People are scared that they need all this money, and you can get money gifted to you. Gifted to you. You know, don't tell the bank this. You know, bank don't listen, lender don't listen. But you're like, well, my dad's not going to give me 10 grand. He's going to want me to pay that back. Well, you know, that's between you and your dad. You don't got to tell everybody. You know, my aunt's not going to give me 10 grand. She's going to pay that. Well, that's between you and your aunt. No one needs to know that, you know? So it's, you know, little things like that. I think
because you can't borrow to borrow is why Jeff is saying that. You can't borrow money in order to borrow money to buy a mortgage, right? So you can't do that. It's got to be, a gift has to be, quote unquote, no promise to repay and things of that nature. So that's why he's referring to that. But I just wanted to point that out so they knew.
So what you do is you take your aunt out to dinner to the restaurant she wants, and you get she wants, the one with alcohol in it, and you get her to say, yes, I'm going to loan you money. And then closing comes and she changes her mind the day after. That's okay. She said, hey, I'm going to give you money. Sorry. You get her to say, I'm going to give you money. It's yours. And then after the closing, whatever she changes her mind, she can change her mind because you already got it. Okay, getting to the last thing. Stephen, will the government buy me a house? Is there a first-time home buyers program that all I got to do is take this 3-hour or 6-hour course online, and the government, they're just going to give me like $21,000, and I'm not going to have to pay it back. I can buy an investment house. I can sell it in a year. Like, does the government do anything like that for me since I've never bought a house before?
Well, the government doesn't do it. There are a lot of people out there that have some down payment assistance programs, and they think that they can do it without any obligations or commitments. But a lot of those programs, you got to look at the details, the very fine details that are written in those guidelines, because a lot of them require you to have, you know, a tighter debt ratio, a higher credit score. You got to wait 2 or 3 months for the closing process because there's so many people in line to try to get the money. The money runs out because it's on an annual budget. There's issues of you got to keep the house for 7, 8 years, or you got to pay that money back. So there's a lot of stipulations and requirements that come with free money, right? So you have to understand nothing's free. Sometimes it manifests itself with a higher interest rate as well than what you would normally get if you just go down to your normal bank or lender. So there's a lot of stipulations on that because that's how they're making that money back. Higher interest rate. Yes. Mm-hmm.
What does a higher interest rate do to payment?
Well, it's going to jack that payment up and maybe take you outside of your comfort zone. You mentioned that you start the conversation like I do with what's your comfort zone? What are you comfortable paying every month, right? What are you paying right now for rent? And so if they don't know that higher rate's going to jack them up and take them out of their comfort zone, then therefore the free money might not necessarily be helping them, might be hurting them too.
And a lot of little glitches to that is each county has its own thing, has its own rules. It's not that I haven't had successful deals, but I feel that there's a big myth and misled information about I've never bought a home before, so now I'm ready. And you have a person that thinks that FHA means first-time home buyer approval, free money. FHA doesn't mean that. It's a government-insured loan, Federal Housing Administration. And they think that they're just going to get this assistance, or they think that they don't need any money down. And just like you were saying, it's actually harder to get. It's not free money. Let's get that out of the way. They're going to give you a higher interest rate, or they're going to tack it to the end of the loan. They're going to give you a higher interest rate, which you're going to pay back 3 times the amount of money that they might be giving you, which is $10,000 or $15,000, or they tack it to the end of the loan, which you're going to pay back 3 times as full.
Right.
But that higher interest rate, like you were saying, could mess up your whole debt to income. It's harder to get a loan with down payment assistance, or not necessarily a grant. A grant's a little bit easier. That is free money, but there's a lot of restrictions. It's harder to get a loan that way than it is normally. You can get a loan, a lower interest rate, just by having some money. And even with the down payment assistance, you still have to have like $2,000 or $3,000.
Right.
You can't have $0 in your bank account. Am I correct?
Yeah. A lot of them require reserves, and things of that nature as well. And that might be a derivative of the credit score. And again, also you got credit scores that are too low. Sometimes you can't qualify for those programs, right? Your credit scores have to be a little bit higher. And so you'll have to go through some credit counseling classes and get your scores up before you can actually get access to that money. So, yeah.
Awesome. Well, I think we did a great episode 1 of Jeff of All Trades. It'll just get better and better.
Yes.
And the time goes by fast. I have so much more that I want to say, but I don't want to. We'll be here all day. Just to do a little recap, we talked about, for people jumping on right now, first I want to thank you for viewing. When you see this on my YouTube, please subscribe. The more subscribers I have, the more stuff YouTube lets me do. They're really strict. Please share. If you have any questions for me, anything, it doesn't have to be about real estate. That's why Jeff of All Trades. If you're remodeling your house and you want to know contractors to hire, if you have ideas about investment properties, Stephen is the master of investment. And our next show is going to be about what, Stephen?
Investment properties and utilizing some rental income and things of that nature to qualify.
And he's going to teach us the secrets and the tools that you don't have to have all this money to buy it. You don't need, $100,000, $50,000, $20,000 to go get an additional well, depending how much it is. But there's ways to get in an investment property that actually might be easier than buying a house, buying your home site. So I appreciate everybody listening. Stay tuned next week. We're going to talk about mortgages for investment properties. My goal is to have as many rental income properties so I can have investments, and it's not just a passive income. You're actually helping the society. There's always renters. There's always someone needing to rent a home. So it works both ways. If you're not going to do it, someone's going to do it for you. And then let's see here. Every Tuesday, 2 p.m. The goal, and that should be solid time frame. Tuesday, 2 p.m. I'm going to do this. It's going to be about, each week's going to be something different. It's not just real estate. I don't want you people to think that, it's just buying and selling. No, it's about everything out there that has to do with having a home, owning a home, or in your community. And don't forget to check out my YouTube page. I have all other informative information on there. And Stephen, how can they get a hold of you?
You can get a hold of me by you can find me on Facebook, Stephen for a Home Loan. You can find me on the World Wide Web, as I used to say, www, the number 4, the letter A, home.loan, the number 4, the letter A, home.loan. And then, my business card is also right there. So you can find my information right there as well.
Yep.
Yeah.
It's like that.
Yeah. There's my DDT.
Yep. And Stephen he's a lender, but he doesn't just do one type of thing. How many properties do you own, Stephen? Like 8?
I've got 20 total units, 13-unit apartment building, a couple of duplexes, and a couple of single-family houses as well.
So if someone knows how to do it and manage it, and I think that's another thing, what do you do when you get it? What do you do when you get an apartment building? So that's a lot of good insight.
Yeah.
First timer like myself, would love to take advantage of and utilize.
Yeah, absolutely. Looking forward to it. Let's talk about it sometime.
All right. I want to thank everybody for tuning in. Like I said, if you want to connect or just chit chat, or if you have any questions about your house or anything to do about your house, or any goals in general that you want to go over and you think I can help with, please reach out to me. I want to thank you for listening. And again, once this will be on YouTube, it will be on Instagram, Facebook, Twitters, all the social media stuff that our world, has on today, the whole platform. Thank you and have a great day.